please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
There is a stress sector for the banking system as such, not only State Bank of India.
There is absolutely no stress. In my loan book, speaking for REC, 85% of our lending is to the state sector or to the central PSUs.
It will mark our entry into India full stop. This is our first big step into India. We're all very excited about it.
Our brand is very aware. We are having properties worth around 7,000 crore rupees, and we are having a lot of other assets also. So I don't think bank will have to take any haircut.
The market's up 46 odd points, which means we are off almost about 40-45 points from the day's high.
It was a good day, and in particular for the banks, that's where the short covering bounce was the biggest, and in particular ICICI and SBI.
Market makes a major recovery in the last hour to snap a 6-day losing streak with support from the banks. Sensex ends 300 points in the green. Nifty ends it just a tad below 10,250.
Banks bounce back. The Bank Nifty recovers over 400 points to close nearly 1.5% in the green. ICICI Bank and HDFC Bank contribute the most to the gains.
Power financiers REC and PFC slip in trade after State Bank tells CNBC TV18 it is worried about power project loans. SBI adds that 6-month period left after RBI's recent directive is a small time to address power sector debt resolution issues.
Liberty House says they are the chosen buyers for Amtech Auto, but details of the deal will be disclosed later. They also added that they will not be taking on any of Amtech's debt. It's an all-cash deal. Amtech Auto and its subsidiaries close higher in trade today.
Metals lose their sheen. The Nifty Metal Index closes around 0.5% in the red. Tata Steel is among the top index losers. Vedanta and Hindalco also slip. Well, those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talkback, the show where we tell you about every bit of the 8 hours of the market in just 5 headlines. I'm Lata Venkatesh. With me, my colleague Prashant Nair. Hi, Prashant.
Finally, some reprieve for bulls. Have to say that over the next 30 minutes, as we get you the stories, we'll also take questions. I mean, your questions that you send in to us, and our experts will answer those. We have Mayuresh Joshi of Angel Broking and technical expert Mitesh Thakkar joining in. Gentlemen, thanks very much for being with us here on the show. But let's first quickly wrap up the day's trading action before we start to take those questions. Overnight, global session was flat. This morning started in a decent kind of fashion, but it really picked up pace in the last, hour, 2 hours or so of trade. Lata.
Well, the indices and some of the key stocks were close to support levels. 10,120.30 on the Nifty as the 200-day moving average could have provided support. We have seen SBI get support at about 240, 245. ICICI has been routinely getting support at around 270. Some of these state-owned banks, Punjab National Bank, Union Bank, usually get support as they go below 100. So it was expected, as our technical expert Ashwini told us earlier in the day, supports can also be given up, and markets can pierce. But today they held, and maybe some help came from what you said. The global markets shrugging off the trade war fears, at least for the moment, and we saw a bright band of green in Asia. That also must have helped a bit. Now, we don't know whether markets are merely flattering to deceive, but for the moment, the support levels have held.
Oh, absolutely. And, so PSU banks and beaten down banks, basically, all across did very well. So PSU bank index, private bank index.
Financials.
Financials, essentially. Energy, the index was higher. Then there was still losers. Pharma, for example, Sun Pharma sold off almost 15 rupees in the last hour as the market shot higher. The index also slipped. FMCG, metals were some of the other losers, index-wise. Nifty heavyweights, which did well, RIL, HDFC Limited and L&T come to mind. So those three contributing the most. In terms of banks, SBI, Corporation Bank, BOB, as far as public sector banks go. On the private side, ICICI did very well. Federal Bank was higher. DCB closed up as well. Of course, and the general trend of big recoveries all from the day's lows large stocks recovered anything between 3–5%. So although they don't find mention here, because from yesterday's close they might not be high, but from the day's low there was a lot of recovery which we saw. Broader market gainers: Bhushan Steel, Vakaranji, you had something like Rain Industries, Reliance Infrastructure, Radico, something like Tejas Network, huge volumes, look at that, almost 7.25% higher on very large volumes. Losers, I mean sugar, really, Balrampur Chini cracked once again. REC PFC, we've sort of talked about that issues facing that sector. IDBI, relentless march higher even as markets looked weakish, that gave way. Adani Power was weak, and you had BEML, which continues the drop, 1140 odd on BEML now.
Or at least IDBI Bank and BEML are stories where people try to build up an idea of a merger or stake sale, and that came unraveling when things didn't happen. But we don't know. The last word is not said on IDBI for sure. Let's first get a view from Ashwini and then play you some very interesting expert opinion that we got through the day. Okay, Mitesh, sorry. Mayuresh and Mitesh are our guests. Mitesh, what is your take on how do we trade Nifty at this juncture? At 250, is it actually a time to go long before you short?
Yeah, good evening, Lata. I think, you know, we had a very good support building at about 10,320. We broke below that, hit the 200 average marginally. You can say missed by about 15 points, but practically hit the zone of 200 average. And then we've had a bounce back. My sense is that we might see some kind of selling pause around the 200 average. Short covering will also help. But on the upside, till 10,300, 320 is being crossed, I don't see a meaningful recovery happening. So what might happen is that with this selling pressure kind of coming down, it might be a market which might just settle down into this range of 170 points, 10,130, 140 on the downside to roughly about 10,300 on the upside.
Oh, okay. We've got some other expert opinion as well. We spoke to Madhav Dhar of GTI Capital Group. He says he expects more correction to come into this bull market.
I think this will be a correction and an ongoing bull market. My concern is simply that the correction is not either big enough or deep enough or long enough for it to really shake people up. And corrections end when people are sort of really shaken up. It changes their convictions. You could have a much more meaningful correction that is perhaps, 12 to 20%, of which we are barely halfway through. So my own gut instinct is it gets worse.
Okay, so it gets worse before it gets better. That, of course, is unsaid. The second story of the day is essentially the pressure on banks, which kind of went away. And the bank Nifty recovered 400 points today to end nearly 1.5% in the green. SBI and ICICI Bank saw buying as they essentially reached important supports. SBI closed up 4%, ICICI Bank was up 3.5% in the green. ICICI Bank and HDFC Bank contributed, between the two of them, 70%, to the Nifty Bank's gains. However, Yes Bank, IDBI Bank saw losses. Yes actually ended the day over 1% lower. It was off the lows actually. IDBI Bank was down 5.5%. We actually spoke with let's just spend a minute, Lata, talking about banks.
No, well, basically, I don't know if this is the last of the problems, because there is a fairly ugly set of numbers that we will get for the fourth quarter.
Yeah.
So we may not be done and dusted with selling, but clearly there's an exhaustion of selling, at least in the better variety of banks, and therefore you saw this support. But I would rather that we listen to this expert view. Navneet Munnot of State Bank of India Mutual Fund, a market veteran, and also Madhusudan Kela. They spoke about the banking sector and the recent fraud cases, what impact it can have on economy, banking system, lending. Just listen.
In another 2 or 3 years' time, I think probably the corporate lending or the wholesale lending will be far more safer and secure and better than what the retail lending is today. Because what we had in 2008, and one of the largest private sector bank got into trouble, we had like all those CIBIL and several other things in the space of retail lending. And then retail lending completely changed. The digital technology helps. Something similar is happening on the wholesale lending side. It will be very different in the next few years than what it is today. In 2008, had bank not did what bank did, India would have probably in the same boat as some of the other Western countries. But I think that we did the hand-holding, and I think over a period of time, these banks will still remain relevant, maybe in a completely different shape. The governance needs to change, a lot of other things need to change, and sometimes you need that trigger, and I think that trigger has come.
You look at it, how much this, out of proportion this is blown. They're talking of 10-12,000 crore rupees being lost on 2 clients. This is what has come out, at least in the last 2 weeks of investigation. They have gained more money than this in 2 accounts, Bhushan Steel and Bhushan Power, than what they were anticipating. We are talking of 4 lakh crore rupees of NPL resolution in the next 3 to 4 months. 2,56,000 crore rupees of NCLT 1, another 1,40,000 crore rupees of NCLT 2. 4 lakh crore rupees will bring down the overall gross NPL by 40%. It's a very large number. Huge. But in spite of all that, stocks have corrected 50%, 60%, 40%. So what market is fearing, that is it 10 times larger than what has come out?
All right, we've got questions now. Twitter user Krishna holds 2,000 shares of State Bank of India, bought at 276 rupees a share. He says that he can hold it for 1 year and expects SBI to earn 3,000 crores every quarter.
What?
Okay. He basically wants to know what he should be doing. 2,000 shares of SBI, bought at 276 each. Mitesh, what would you tell him?
So Prashant, I think SBI is one thing which has clearly outperformed the entire PSU banking lot. The chart itself is quite stronger. It's had a correction, no doubt about it, I think with the market as well. But 240, 245 zone is a very strong support zone for the stock. I mean, in case the gentleman wants to average or somebody wants to buy a fresh, I think that's the range to buy into. And my sense that in the next few months, as the market correction plays out and the markets again get into some kind of a stable or a up move kind of a zone, the stock should hit back to about levels of 325, 330. Okay. So clearly at these levels, it's a hold or even a buy.
Okay, 276 if it's a buy and 325 is what you're expecting. Not a bad deal at all. Mayuresh, would like your view on State Bank, but here's another question. So we could look at both. This is Twitter user Amy is looking to buy PNB shares. He wants to know if he can expect it to touch 80 rupees by March end, or should he buy now? That is will it go even cheaper? And by the way, I think he's Ame Hawari. Sorry. What's the advice, Mayuresh?
So evening, Lata. I think specifically on State Bank first, again, as Mitesh was pointing out, I think out of the PSU lot, I think this looks a little bit more saner at this point of time. And even if one accounts for all the new provisioning that will take place on their books because of the new NPA norms, the NCLT cases, the standard asset provisioning and the excess provisioning that is required for a few of the existing NCLT cases, I think that credit cost component will generally go up for the banking industry as a whole, and specifically for PSU banks. But it's far better placed in terms of CASA, in terms of adequacy, and the merger behind that. So again, I think if it does decline in the market correction over the next few weeks, I think you can average it out if the stock does correct 20-30 rupees from the current level, and then probably hold on, extending its time horizon to a year, year and a half. For PNB in particular, again, I think the kind of hit that it has probably taken at this point of time, I think it's going to have a substantial impact in terms of its book. Now, what you've probably seen on the flip side with the Bhushan Steel resolution, I think some offsetting effect can take place because PNB was a leader in the consortium of lending to Bhushan. But to a large extent, again, I think the earnings are going to take a hit, and the existing provisioning that PNB is doing with the accelerated provisioning that is required. My own sense is that there are better banking stocks to look at. So I think ICICI Bank, as you and Prashant were mentioning, is something that I've liked in the past. I think that should stand out over the next 2.5 years.
All right, we'll leave it at that, Mayuresh, and move over to the third headline from the markets today. Power finance companies REC and PFC slipped in trade today after SBI told CNBC TV18 that they are worried about power loans. REC closed over 7% in the red, while PFC ended the day over 3.5% down. First, let's listen in to what Sunil Srivastava, the Deputy Managing Director of SBI, told us, as well PV Ramesh, Chairman Managing Director, REC.
Is a stress sector for the banking system as such, not only State Bank of India. There are quite a few power plans which are yet in the process of implementation, but post February 12th circular of the Reserve Bank of India, there will be very little leeway for the banks except to recognize them as NPAs and to find a resolution plan within the next 180 days, which ends in August or perhaps in September, as the case may be. There is obviously a problem related to DISCOM's health. Now, these all issues have to be addressed in a very comprehensive manner. And addressing these issues in a short possible time of 6 months is going to be very, very difficult.
There is absolutely no stress. In my loan book, speaking for REC, 85% of our lending is to the state sector or to the central PSUs. And none of those assets are stressed. If you look at any of the financing institutions, we have the lowest NPAs. I mean, the gross of 2.9% and the net of 2%. Now, this is among the lowest, and this Reserve Bank of India guidelines certainly would have an impact, but that would not be substantial. We have already provisioned.
All right, let's get some questions then. Twitter user Avinash Patra has written in. He's got 250 shares of REC. He says he can hold it for the next 6 to 12 months, and he wants to know if he should actually do that. Mitesh, REC, what would you tell him?
See, I think the stock has been quite beaten down, extremely oversold, but we'll need to do some base building around these levels for, some kind of reversal to happen. My sense is that if he has got a good time horizon, I think, buy it even at current levels, I think, on mild declines. I think the stock is clearly, poised to at least arrest the decline, if not reverse it immediately. And anything close to about 110, 120 would be good levels to add on to his positions. And I think on the upside in the year's time, I think he can possibly look at 150 as the target.
Okay. Thanks, Mitesh. Do stay on. We have to take a break. We are coming back with more headlines, more questions, and of course, more answers.
Welcome back. You're with us here on Markets Today Talk Back. Mayuresh and Mitesh have been answering your questions. We've gotten through the top 3 stories of the day. Let's get on with the 4th one then. Liberty House says that they are the chosen buyer for Amtech Auto. But details of the equity value for the deal, the haircut for banks, etc., the finer details will be disclosed later. They also say that they will not be taking on any debt of Amtech Auto and its subsidiaries. Stocks essentially, both Amtech and the subsidiaries, Metalist, Forging, Castex Technology, ended the day over 4.5% in the green. Let's quickly first listen in to Sanjeev Gupta, chairman of Liberty House Group, on the deal with Amtech. Here's the bid.
No, it's all cash bid. There's no debt. It's one of the leading automobile component businesses. Have already the leading auto components business in the UK, which actually includes some of this Amtech's units which we acquired through the UK administration process. It so combines very well with our business. We have a clear plan on how to revive this business and how to both increase efficiency and increase volumes. It will mark our entry into India full stop. This is our first big step into India. We're all very excited about it.
Okay, and let's rush through the final headline from the markets today. Metals companies fell in trade today. The Nifty Metal Index was down close to 0.5%. Tata Steel was among the top index losers, ending the day nearly 2% in the red. Vedanta was down around 1/3%. Hindalco down over 3/4 percentage point. With that, questions. Twitter user Siddharth Gaikwad has 1,000 shares of Vedanta bought at 346 rupees, wants to know whether he should hold or sell. Hasn't told us what is his appetite in terms of time, but Mitesh, 346 Vedanta, what should he do?
I think, Lata, both appetite in terms of time as well as risk. I think if you can average more at lower levels might be a better strategy because the stock still looks corrective to me. I think around 280, 275 would be a good buying zone if you can get it. And I would suggest averaging out there so that on a bounce back, you can get an exit closer to about 315, 320.
Okay.
You want to weigh in, Mayuresh? I mean, Vedanta and the metal SPAC, yeah.
So again, Prashant, I think with all the tweets that Trump is sending across and the expectations of a retaliatory trade war, I think is creating the metals index to be a little bit weak. But I absolutely agree with Mitesh. I think if the stock does correct around that levels, I think it's a good time that he can accumulate the stock. Again, a major component of its business that comes from zinc. the prices thereof, because of lower supply and steady demand, looks to be very, very strong. On their oil and gas part of the business, I think efficiencies have been achieved, specifically in terms of the cost of production. The aluminium part of the business is looking pretty strong, and there is every possibility that they might vie for the mines if they do open up in terms of captive mining. So on an overall basis, looking at their balance sheet dynamics and looking at the expectations in terms of how numbers will flow through over the next 4 to 6 quarters, I think this looks like a very reasonable kind of a bet. So yes, if it comes down to those levels, average it, hold on for the next 1 year. If that is the time horizon, you might probably make a reasonable amount of money out of this one.
All right, gentlemen, we have to leave it at that. Thank you very much for joining us. And with that, we wrap up this edition of Markets Today. Talk back. Thank you very much for watching.